Good morning and welcome to the Amaero International Investor Webinar. I'm Jane Morgan, the Investor and Media Relations Manager, and today I am joined by our Executive Chairman and CEO, Hank Holland. The company has made significant headway over the past few months, and we remain focused on delivering the transformative milestones which were outlined in our investor presentation, which was lodged with the ASX this morning. Today's presentation will be followed by a Q&A session, so to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Hank, I'll hand over to you.
Thank you, Jane, and hello, everyone. After announcing Amaero's relocation to Tennessee, Amaero immediately began receiving inquiries for C103 powder and inquiries to collaborate for the development of next-generation C103 and refractory alloy powders. Metal additive manufacturing has advanced significantly in recent years. The advancements include the ability to successfully print specialty alloys, including refractory alloys, the ability to print larger end parts, the ability to print at a faster rate. At the same time, applications and end part designs have evolved to require more complex geometry and integrated features such as cooling channels. So what's holding back the insertion of additive manufacturing in next generation applications? As was recently shared by the leader of a Department of Defense funded research and development laboratory, it's an imperative that we have a U.S. domestic producer for refractory and specialty alloy powders that's a collaborative partner and that's responsive to the supply chain needs for development and demonstration purposes. And it's an imperative that production capacity is scalable. Amaero took bold and decisive steps over the past year to position the company as the largest and the most responsive U.S. domestic producer of C103, development refractory alloys, and other high-value specialty alloy powders. Amaero has an opportunity to play an important enabling role in reshoring highly strategic industrial-based capabilities to the U.S. and contribute to a more resilient and scalable supply chain for defense production and for the space economy. At the same time, for corporate planning purposes, we needed to better understand the demand signals, as a number of programs that may use C103 powder are classified in nature, and with the programs are in the development and demonstration phase of procurement. We needed a consultant with deep knowledge and experience in the defense and space sectors to analyze market conditions and to provide a bottoms-up, program-by-program assessment of demand for C103 powder. Fairmont Consulting is a highly respected firm that has completed more than 400 engagements focused on the defense sector for private equity and corporate clients. The engagements typically involve robust and comprehensive analysis of the market, including competitive dynamics, assessment of demand, supply, and pricing, and insights on market positioning and a go-to-market strategy. We are pleased to share that Fairmont's market study and comprehensive market model have validated Amaero's strategic direction and have provided important market signals for demand, for pricing, and for supply. Fairmont estimates that the demand for C103 powder bed fusion, or PBF powder, will reach 105 tons in fiscal year 2028. The growth reflects a 62% compounded annual growth rate, or CAGR, for the 5-year period ending fiscal year 2028. The demand is driven by large secular investment cycles in both defense programs and in the space economy. Fairmont has surveyed the market and estimated current price of C103 PBF powder to range from approximately 4,000 Australian per kilogram to in excess of 5,000 Australian per kilogram, with production lead times of 12 to 24 months. Fairmont has validated the industry need for a U.S. domestic producer of C103 and specialty alloy powder that utilizes proven technology, that has flexible and responsive production capability, and that can scale production to address estimated out-year demand. For internal corporate planning, Amaero has updated its financial and planning models to reflect assumptions that are informed by Fairmont's market study. Amaero expects that prioritizing C103 and high-value specialty alloy powder production will materially increase the revenue trajectory and will accelerate the path to profitability. We remain on schedule with installation and commissioning of the first atomizer. We're pleased to confirm that technicians from ALD, the manufacturer of the atomizer, will be on site at our facility in Tennessee beginning Monday, 26 February, to commence installation. In anticipation of commencing powder production in Q1 fiscal year 2025, we've signed our first supply agreement for C103 feedstock bar. The purchase order was for 2.5 tons. Before we get into the detail of Fairmont's market study, it's helpful to provide an overview of the engagement. Fairmont provided Amaero with a 72-page detailed market report and with a large market model that included information on approximately 550 discrete programs. Fairmont created a bottoms-up high-temperature material market forecast underpinned by public data sources, proprietary analysis, company discussions, and direct interviews with expert stakeholders. The demand forecast is fundamentally a volume times quantity build for specific components. Further, the detailed market identifies key program stakeholders, including the branch of military, prime contractors, and key suppliers that provide important connectivity for business development purposes. Fairmont has identified 4 primary applications that have high temperature material requirements. 2 are defense applications, and 2 are applications central to the space economy. As you can see on this slide, primary applications are hypersonics, strategic missiles, space launch, and satellites. Each of the primary applications merits an overview of the strategic nature of the application and the critical nature of high temperature materials. Beginning with hypersonics, though the US invented hypersonic technology, the US has ceded the primacy defense capability to both China and Russia. As has been widely reported, neither the US nor its allies have adequate detection, deterrence, nor offensive hypersonic capabilities, and there are urgent and high priority initiatives at the US Department of Defense. It's expected that the US Navy and Army's Boost Glide hypersonic weapon platforms will be first in production, followed by the US Navy and Air Force's air-breathing scramjet propulsion platforms. As you can see depicted on the slide, high-temperature materials are needed for both thermal protection and for propulsion systems. Strategic missiles are the cornerstone of US deterrence policy. The Sentinel ICBM platform is in development to replace the existing Minuteman III platform as the ground-based nuclear strategic missile. Production is scheduled to begin in fiscal year 2026. Again, as depicted on the slide, high temperature materials are needed for thermal protection and for propulsion systems. Shifting to the space economy, a very compelling aspect of this opportunity and the insertion of additive manufacturing in C103 is that parallel yet unrelated large and secular investment cycles in both defense and the space economy are occurring. As it relates to the space economy, the desire to transport larger payloads and to explore deep space pushes the boundaries of existing component design and the boundaries of existing legacy materials. C103 has been utilized in space components for almost 60 years. C103 was first used in the rocket nozzle for the Apollo Lunar Command Module. Additive manufacturing and C103 are well suited for second and third stage rocket nozzles, as well as nozzle extenders. As the proliferation of satellite constellations, satellite utilize thrusters to course correct and to maneuver. These propulsion systems are also well suited for additive manufacturing and for C103. With that as an overview of the application, let's turn to Fairmont's estimate of demand for high temperature materials. For Fairmont's bottom-up program-by-program analysis, it reviewed likely insertion of high-temperature materials in general. This includes both ceramic matrix composites, or CMCs, and metal alloys. It then looked at the estimated share of C103 in all forms, raw and powder. Finally, it looked at the estimated demand of C103 powder. As seen on the slide, high-temperature materials are expected to grow at a CAGR of approximately 15%. Fairmont's analysis suggests that C103 will increase its share of high temperature materials and that the demand growth for all C103, that is wrought and powder, is expected to grow to CAGR of approximately 25%. As a reminder, a CAGR of 25% results in approximately doubling of demand every 3 years. This is considered a very high growth for an industrial application. As it relates to C103 powder, the growth reflects the secular tailwind of additive manufacturing adoption, coupled with the secular growth of investment in defense and space programs. Fairmont estimates the demand for C103 PBF powder in fiscal year 2025 at approximately 25 tons and estimates the demand will grow fourfold over 3 years to approximately 105 tons in fiscal year 2028. The estimated demand growth reflects an approximately 60% CAGR over the 5-year period ending fiscal year 2028. As mentioned, Amaero has utilized Fairmont's market study and its assessment of Amaero's market position as the basis for key assumptions and drivers in our internal financial and planning model. In particular, the market study has informed production planning. Though Amaero does not, in general, plan to provide revenue or earnings guidance, we do want to provide insight on foundational assumptions so that analysts and investors can build financial models and arrive at independent estimates of revenue and earnings potential. This slide depicts Amaero's anticipated production capacity based on the anticipated timing of commencing production for the 4 planned atomizers and the planned ramping of production for each atomizer. The production estimate is only for powder bed fusion powder, or approximately 50% of the expected total powder production. The period reflects fiscal years ending 30 June. As summarized in the chart, we expect that production of PBF powder in fiscal year 2025 will equal approximately 17 tons, all coming from atomizer number 1. In fiscal year 26, we estimate total PBF powder of approximately 92 tons, with the atomizer number 2 commencing production in Q2. In fiscal year 27, we estimate total PBF powder production of approximately 193 tons, with atomizer number 1 operating at capacity, atomizer number 2 operating at about 2/3 capacity, and atomizers number 3 and 4 commencing production in Q1 and Q2, respectively. We go on to provide an estimate of steady state or at capacity production of approximately 400 tons of powder bed fusion powder. Mind you, that's 800 tons of total powder production. Finally, we estimate that we achieve steady state production in 4th quarter fiscal year 2028. Invariably, there will be adjustments to the production schedule along the way, but this is intended to help investors understand the anticipated ramping of production capacity. As we highlight in the green bubble, we plan to strategically allocate production. We plan to prioritize C103 and development of refractory alloys. Next, we plan to allocate production to other high-value specialty alloys, then allocate excess production capacity to titanium alloys. Though we have not provided guidance for production of various alloy powders, I would suggest the following. By nature, specialty alloys are lower volume and higher price. As you'll see on the next slide, most production capacity is oriented to high volume commodity alloys, and many of the atomizer technologies are unable to atomize refractory alloys. On this basis, Fairmont expects that Amaero can achieve a higher market share than would be typical for commodity alloy producers. At the same time, our financial and planning model assume that we ramp market share over multiple years. Finally, I would point out that production planning reflects that atomizers number 2, 3, and 4 are dedicated to titanium alloys. Let's transition to discuss our focus on specialty alloys. A mantra of many investors is TAM, or total addressable market. The assertion is that the larger the TAM, the better. And albeit many good, successful businesses are underpinned by a large market opportunity, there are certain structural benefits to specialty or niche markets. Large TAM markets attract competition, and large TAM markets, by nature, reflect a commoditized product. Thus, competitors differentiate on price. The result is a high volume, lower price, and lower margin business. Conversely, specialty markets attract less competition. The demand doesn't support capital investment from multiple producers. And often for the market participants serving the specialty market, the product is tangential to their core business. In Amaero's case, producing specialty alloy powder for additive manufacturing is our core business. It drives our capital allocation decisions, it drives our operating decisions, and it's reflected in the expertise and experience of our team. As you see depicted on the bar to the left, stainless steel comprises approximately 60% of total powder production and is priced at the lower end of all materials. As referenced before, high volume, lower price, lower margin. Notice that approximately 85% of all powder production is comprised of lower value alloys. Only about 15% of powder production is comprised of titanium alloys and specialty alloys. Titanium alloy powder has a price that's approximately 5 times higher than stainless steel powder and higher than all other commodity alloy powders. Amaero will focus exclusively on high-value specialty and titanium alloy powders. As we have stated, Amaero is positioned to be the largest and the most responsive U.S. domestic producer of high-value specialty alloy powders that include C103, development refractory alloys, and other high-value specialty and titanium alloys. We've suggested that the focus on specialty alloys is expected to materially increase revenue trajectory and to accelerate the path to profitability. Given the production planning guidance in the indicative market price data that we have provided, I anticipate that analysts will update their models and will provide investors with an independent assessment of revenue and earnings potential. Without commenting on specific revenue expectations, I do want to illustrate the potential impact to revenues. This chart depicts a production scenario that's comprised of 10% C103, 10% to other high-value specialty alloys, and 80% to titanium alloys. Rather than provide specific revenue guidance, we're illustrating the impact on revenue by allocating a portion of total production to C103 and to specialty alloys. As a reminder, titanium alloy powder is priced at approximately 5 times higher than stainless steel powder and higher than all other commodity alloy powders. In Amaero's case, we will reference the price of titanium powder as the base price. As data reflected on the prior slide, the price of C103 powder is approximately 15 times higher than the price of titanium alloy powder. Specialty alloys range in price, and we've assumed that the portfolio of specialty alloy powders has an average price that's approximately 3 times the price of titanium. As depicted in the chart, if 10% of total production was allocated to C103, it would result in almost 60% of total revenue. By contrast, if 80% was allocated to titanium, it would result in approximately 30% of total revenue. As compared to production dedicated titanium, the mix of 10% to C103, 10% to specialty, and 80% to titanium would increase revenue by an estimated 2.6 times. Also, the revenue lift from atomizer number 1 is expected to accelerate the path to profitability. Finally, prioritizing production of C103 and development refractory alloys is expected to establish Amaero's differentiated market position as the largest and the most responsive U.S. domestic supplier of refractory and high-value specialty alloys. Let me turn to our competitive advantage of expecting to have industry-leading yield of powder bed fusion, or PBF powder. This is an important aspect of our competitive positioning, and it creates a moat or more defensible market position. Amaero will commence installation of its next generation technology, IGA Premium, in less than 2 weeks. This will be the first IGA Premium to be installed in the US. As announced, we expect to commission the atomizer in June, to commence powder production in Q1 fiscal year 2025, and to commence commercial sales in Q3 fiscal year 2025. Also, as announced, we've ordered a second IGA premium and expect that it will be delivered in early fiscal year 2026. Based on trial data, we expect the IGA premium will have approximately 2 times higher yield of PBF powder. As the PBF powder has a much higher value than the off-cut powder, this impacts revenue, unit economics, and margins. It also provides flexibility with pricing strategy. In addition to the foundational technology, Amaero has attracted a technical and operating team that has decades of atomization experience. The team also includes pioneering experience in atomization know-how, as well as computational fluid dynamics and numerical modeling expertise. We expect that the yield advantage will have a competitive and financial benefit to Amaero, and we also believe the yield advantage may further support the insertion of additive manufacturing in place of legacy subtractive manufacturing modalities. In the end, Amaero wants to collaborate with government-funded research and development laboratories, with prime contractors, and with suppliers to enable insertion and to accelerate adoption of additive manufacturing. To that end, we must establish the comparative technical merits of additive manufacturing. We must establish that U.S. domestic supply of powder is responsive and is scalable, and we must establish that it's cost competitive. As you see on this slide, once in serial production, the cost for printing and post-processing is relatively comparable for high-value specialty alloys and for less expensive alloys. In this illustration, we've estimated the pricing for a 7-day build on a mid-sized printer, such as an SLM 280. Irrespective of the material, the cost of the production is estimated at $9,000. Now we've estimated the cost for a part produced from Ti-6-4 versus a part produced from C103. The total cost of end part in titanium is estimated at approximately $12,000 versus a cost for the part produced from C103 is estimated over $100,000. In the case of titanium, the cost of powder is attributable to 26% of part cost. Whereas in the case of C103, the cost of powder is attributable to over 90% of part cost. As such, a 10% reduction in powder price reduces a titanium part by approximately 3%, while the same 10% reduction in C103 powder reduces the part price by 9%, a 3x impact. Finally, before taking questions, let me comment on planned capital investments. As shared in the ASX announcement dated 7 February, we want to be transparent with investors about the capital expense budget necessary to achieve at-capacity production with 4 planned atomizers. As summarized on the bar graph, we provided estimates for capital investment relating to the fit-out of facility, purchase of 4 atomizers, and purchase of ancillary powder processing equipment for the back half of fiscal year 24, and for fiscal year 25, fiscal year 26, and fiscal year 27. We expect capital expenditures to total approximately $54 million through the end of fiscal year 25, and to total approximately $76 million through the end of fiscal year 27. Also, we have commented that we expect operating losses in calendar year 24 to be approximately $14 million. And we expect to achieve approximate break-even operations in calendar year 25. Lastly, we expect the funding will be raised in a combination of equity, asset-backed debt, and government grants. I hope that this has been a helpful overview. I would be happy to take questions. Jane, I'll turn it back to you. Thanks.
Hank, thank you for the great presentation. And again, webinar attendees should use the Q&A function if they've got any questions for Hank, which can be found at the bottom of your screen. But let me jump into it. So previously, the discussion has been on each ICAR having a capacity to produce 202 tonnes per year of powder. And the Fairmont Consulting Review points to the capacity of 101 tonnes per annum, with this focus on PBF powder production. Sorry, it's a bit of a long one. So can you please take us through the differential in capacity And will you be anticipating building capacity beyond the 101 tons per annum?
Great. So I'm glad the question was asked in case there's any confusion. So we have not changed our guidance on total production. So each atomizer has an estimated production capacity of approximately 200 tons, but we expect a yield of about 50% for the powder bed fusion cut, or the most valuable powder. And thus we expect about 100 tons per atomizer of PBF powder of the total of 200. You'll notice on the first atomizer in the presentation, it is a bit less, not consequentially, but a bit less nonetheless. The reason for that is, in anticipation of having multiple materials, there's change over time between atomization of materials. And so we won't take investors back to it, but just to reference it quickly, get the numbers here to make sure that I reference exactly the right numbers. So we're looking at about 96 tons for atomizer number 1, which will be multiple materials, i.e. C103 and specialty alloys, versus about 101 tons or 100 tons for that dedicated to Ti 6.4. But again, the total production capacity of 800 tons is unchanged, and roughly 50% of that being powder bed fusion is unchanged. As far as ramping, what we've tried to provide, again, we don't want to get in the practice of providing revenue to earnings guidance, but we do want to equip analysts and investors to build their own models. And thus we've tried to be very transparent with how we expect to bring the atomizers online, as far as each atomizer over time, how we expect to ramp up the production of the atomizers. There will be a total of 3 production shifts, so beginning with 1 shift to 2 shifts to 3 shifts. And importantly, which is my observation that ASX is often not done, also provide the associated capital investment required, right, to fully develop the at capacity production. So, you know, the good news about this is we've shown investment out to calendar year 2027. We will then be fully funded. And moreover, as we've established, we expect as of calendar year 2025 to essentially achieve break-even economics. So we do have more capital need in front of us. We think it is relatively short-lived. And then we have essentially an installed base with significant revenue growth and significant margins expected on that business for a period of time.
Wonderful. Thank you, Hank. This one's come through a few times. So how difficult is it to secure C103 feedstock of the quality that you need to deliver the PBF powder for hypersonics, strategic missiles, space launches, etc.? And do you anticipate any challenges in securing a long-term source?
Yeah, this is a really important question. And if I may, I'm going to provide a bit of granularity on this because there's different components to the question. First, as we announced, and we just announced, we have signed our first supply agreement for 2.5 tons of C103. And that will be used as we begin our testing, begin making material for qualification, and for our first commercial orders, the back half of fiscal year 25 and the beginning of calendar year 25. With that very same party, which is a well-known US distributor, we are in conversations right now for a longer-term offtake agreement or supply agreement. Think of this as calendar year 25, calendar year 26. And so we're progressing that, and we feel good that we will put a long-term supply agreement in place for the, I say long-term again, calendar year 25 and calendar year 26. So give us a couple years of runway. The challenge is interesting with C103 and refractory. And here's what I mean by that. The elements themselves were not subject to the challenges of rare earths or titanium that are largely coming from China and Russia by way of example, right? In the case of titanium, you've got both your mineral sands as well as your Ti sponge processing, largely captive to China and to Russia. In this case, niobium C103 is about 90%, a bit less niobium. About 95% of the world supply of niobium is mined in Brazil. And it's a little bit less than 10% hafnium. Hafnium largely is mined in North America. So you don't have the elemental risk as far as geopolitical. However, the US still has a shortage of melt and casting capacity. And this is something that we are already in discussions with very keen support of Department of Defense research labs, as well as other government funding vehicles, to stand up our own proprietary melt and casting capability over time, where essentially we can create our own feedstock. That is, source elements from places such as Brazil and North America, and then melt and cast our own bars. That is part of our plan. My guess is that is probably 3 years away before we would actually have the capability. In the near term, 25, 26, we're confident we can source the supply that will be adequate for the amount of production we anticipate. As production continues to ramp up, it's going to be very important that we have that proprietary capability.
Wonderful. Thank you for that, Hank. So next one, more of a comment. Thank you, Theo. As shareholders, we're very impressed with your leadership. So what are your goals as a shareholder and leader of the company? And do you see yourself in leadership with Amaero beyond 2025?
Yeah, it's a good question. And maybe one way to answer the question is to comment that I think there's probably 3 most important strategic decisions that we have made. And actually, I would argue 4 most important strategic decisions that we have made since Pegasus led an investment in May of 2022. And since I got involved in executive chairman and CEO role, and I believe it was October of 2022. Number 1 was we identified that the prior management and the prior board's plan was for a single atomizer producing titanium in Australia. That was the business plan. In our estimate, a single atomizer was insufficient scale. Australia was not a terribly pro-business place nor cost-effective place to operate. And that we needed to scale up the titanium well beyond a single atomizer, and thus we identified 4 atomizers to achieve the scale, the revenue growth, and the margins that we would deem acceptable. That was kind of number 1. Number 2 was relocating to the US. And as you know, our first instinct was to seek availability of very attractive capital. But what became abundantly clear as the reshoring efforts in the US gained momentum was that the customers, the demand, as well as capital, was in the US. And beyond that, we have very strong connectivity and relationships in the US, myself as well as other board members. And thus we announced that we would relocate to Tennessee. That's number 2. Number 3, and I would say perhaps this is the single most important thing that we've done strategically, is I think we've hired and attracted a world-class leadership team led by Eric Bono, Ron Amon, Jay Chandran. We go on, Steve Ketcher, Chris Scanlon. We've got a very, very, very strong team with a lot of experience specific to powder atomization, as well as defense, aerospace, space ecosystem, and business development corporate strategy. And so in many ways, I think it was the most important thing we've done. And candidly, it was the hardest thing we've done. Attractive capital is difficult. And it was particularly difficult in Australia in calendar year 22 and calendar year 23, which, as I understand, it was one of the more difficult markets in Australia for small cap names. However, attracting people such as this to uproot from very stable jobs, to uproot from long ties in places they've lived for many years, in the case of these executives, and to commit to essentially an emerging company such as Amaero was a major accomplishment. The 4th, of course, was the pivot and the focus on C103 and refractory. Now back to the question, how does that relate to me and what do I see my role going forward? I see my most important role as driving corporate strategy, communicating with the capital markets, and making sure that we raise capital as we need capital, and we do so in a way that minimizes dilution to existing long-term shareholders. And I preface that by existing long-term shareholders. I don't spend a lot of my waking hours thinking about traders in Amaero stock. I spend my waking hours thinking about how do I maximize the long-term value for shareholders in Amaero, including Pegasus and myself, which own approximately 40% of the business. And so on a going forward basis, I will become increasingly less involved in the operations. By the way, I'm already materially less involved in the operations, given the team that we have in place. And I'll focus more and more on strategy. As I free up more time, I'll focus increasingly on some of these longer term objectives, such as we mentioned, establishing the ability to melt and cast our own feedstock, commercial partnerships, right? This is going to be a very, very important thing. Presumably later we will talk about offtake agreements, commercial collaborations. I think the way a small company such as Amaero scales and leverages our limited resources is we've got to leverage other relationships and other thoughtful strategic partnerships. And we've got to find a way to do so that benefits both parties and that creates an alignment of interest. And that's where a lot of my time and thinking goes these days.
Thank you, Hank. That actually brings me to my next question. And Doug, thank you for sending it through. Can you make any comments on the status of any offtake discussions and or potential government funding?
So only to recount what we've said heretofore. What we've said heretofore on the offtake is what I am more focused on is less so the size of the offtake, more so the counterparty. And what I mean by that is I want to position us, I think about our business as how do we create a moat? How do we create a defensible market position? Now, to some extent, our capabilities, our technology, the lead time to acquire that technology, our leadership team, all of these things create a moat, coupled with, again, we will be the largest, the most agile producer, US domestic producer of these materials, right? All of those things create differentiation in the marketplace. On the other hand, though, if we can strike commercial agreements that are alignment of interest and that win-win for both parties, and you can imagine the complementary capabilities of certain other companies in this ecosystem. So imagine an in-part manufacturer that's got domain expertise in refractory alloys, right? Imagine a government-funded research lab that is at the intersection of the development and demonstration efforts for next-generation weaponry platforms. Imagine a government-funded institution that's at the center of space policy, right? If you think about those counterparties, and that's where we're driving to try to strike offtake agreements and commercial agreements. As I've reported, I would describe the conversations as advancing, and I would describe the conversations as developing the direction I would have hoped they would as far as the nature of the counterparty. So I hope to report more soon. And by the way, I would also add, and investors that have followed this company know this, and to some I understand, I hear, I read, it's a bit frustrating. We are not going to announce MOUs. We're not going to announce letter of intents. When we announce something to the market, it will be a binding agreement. And thus it takes a bit longer, right, to get to that point. It's not my desire to try to create excitement or anticipation in the stock price and to pull forward, if you will, price performance, right? Again, back this idea of creating a long-term value for long-term shareholders. That's my focus. And so from that standpoint, more of my energy is directed at how do we win the trust and goodwill with our investor base, continue to establish that we're going to communicate in a transparent and balanced manner, right? Continue to operate in such a manner that we've got a strong balance sheet, we've got availability of capital when we need it for our growth initiatives, but do so in such a way we minimize dilution. Those are the things that will come to play in this offtake and these other commercial agreements.
What do you believe sets Amaero apart from other producers in the high-value specialty alloys market? And how does the company plan to leverage its strengths to capture and grow market share in the defense, space, and aviation industries?
Yeah, thank you, Craig. So the first, as we talked about, this is really interesting as far as if you look at your installed production capability, 85% of the market are commodity alloys, commodity powders, the largest being stainless steel at 60%, right? Followed by nickels and so forth. These are higher volume, lower value alloy powders. We will not participate in that market. If you look at titanium and specialty alloys in aggregate, it's only 15% of the demand. And moreover, a lot of the atomization technology used to produce even titanium is not capable of melting at a temperature that is sufficient for refractory alloys, right? A US government-funded entity, I see the sun is setting where I am, so I apologize, I've got a bit of sun coming down here. A US government-funded entity actually ran material through our IGA while it was installed in Germany. And they actually looked at I'll just say a number of other technologies. And they concluded that only the IGA was capable, right, of qualifying refractory alloy powder production. And of course, the benefit of our IGA premium versus the last generation IGA is we have materially higher yield of powder bed fusion, which shifts that cost curve and improves the unit economics. So that's kind of explanation number one. Where do we fit in? Number one, I think importantly, because of the nature of these demands, i.e. defense and space. Even space, by the way, is going to be intertwined in defense, right? There will be very few space applications that are considered 100% commercial by their nature. And thus, there is a strong preference in the US today for US domestic source production. And we all read about the onshoring efforts underway in the US. These are US presidential executive orders, funded mandates by Congress, right, to bring and onshore these capabilities in the US. And the key to that is US domestic production. So then you say, what is the current landscape of US domestic production? And it is very limited as identified by Fairmont. You have a single world-class producer that has limited capacity. They operate a single IGA that is a last generation IGA. You have other producers that have unproven technology. And then beyond that, the production is outside the US. And by the way, even Canadian producers are not considered US producers. They might only be 20 miles from the US border. They might be a very close US ally. It is still not considered the same. And thus the reason I think being in the specialty market, coupled with being a US-based producer, with the ability to have agile, responsive production. And what I mean by that is, if you're a US government-funded research lab and you need 50 or 100 kg of some very expensive development alloy, you can't wait 2 years to receive your production. And that is the lead time in the industry today. So what we want to position ourselves in, we're fortunate to have this extra capacity, is not only be the largest producer, but maintain and prioritize that production so that we can collaborate with those partners and we can serve the market as that highly responsive, agile producer.
Thank you, Hank. Just on diversification. So, excuse me, given the report's emphasis on defense, space, and aviation sectors, is Amaero exploring opportunities in other industries where high-value specialty alloys could be in demand?
Yeah, again, this is a great question. There's only so much that we can cover in these presentations and the comments that we make. And the answer is absolutely. And let me give you 2 examples. And by the way, as we continue to develop the specialty market, other use cases will come about that we haven't even anticipated, right? But 2 examples, and both of which the nature of the projects is I'll have to speak somewhat opaque or vaguely, if you will. Within powder, and start there for a moment, there are other refractory alloy applications we're talking about are primarily high temperature environment application, right? However, if you think about, as an example, think about AUKUS. Think about the US's initiative to greatly multiply our submarine force. Think about naval nuclear. And think about other very, very high value powders that may be necessary for those applications that don't operate necessarily in a high temperature environment. And so there will be very important applications, some of which may well require that we operate as a classified facility. And this is something that we are exploring as well. And many of which will have very few firms that have the established capability to provide the material that is needed for those programs. Also on the manufacturing side, one of the expertise that Eric Bono, Dr. Ron Amon, Fred Yulton, Dave Schmidt, others on our team bring is something called PM, or powder metallurgy HIP manufacturing. So as opposed to printing parts, which we think of as additive manufacturing, you're using powder and you make these large cans and you consolidate the powder in those cans to manufacture an end part. Additive manufacturing is limited by the size of the end part. PM HIP manufacturing is not. You can have very, very large parts. By the way, they won't necessarily be the powder we manufacture. It could be stainless steel, it could be nickel. But it's an expertise that we bring because of our powder metallurgy and our manufacturing domain expertise. So that's but another example of the way that I do think that we will diversify over time. All be the core of what we will be, not, one should not mistake, i.e. 80 to 90% of our revenue over time, I would expect will come from specialty alloy powders.
Thank you, Hank. We've got lots of questions coming through, so I'll keep going through them.
Good, please.
From Tom, thanks for this. So does the increased focus on US supplied sourced materials mean that there will be pressure on Amaero to become US owned and or listed?
Yeah, there too, it's a really good question. And it is an important consideration. And there are a number of programs in the US, whether it relates to federal funding, whether it relates to having a classified facility and classified projects, other considerations that take into account the ownership of a company. Less important where we're listed, more important where the shareholder base is. They do look at it on a fully diluted basis. From an ordinary share standpoint today, US investors own approximately 45 or 46% of Amaero. On a fully converted basis, when you include the options, US investors own over 55% of Amaero. It will likely be important that we maintain greater than 50% ownership on a fully converted basis to access government funding as well as some of these other commercial opportunities. Separate from that is where we're listed, and that's really going to be a matter of capital market access, right? I think today the ASX in Australia is absolutely the best place for this business. In my opinion, the ASX is a much better market for smaller companies and emerging companies. I think the Australian investors understand emerging companies such as Amaero, and of course, tangentially, we're also related to metals and mining, and Australia has a strong background in metals and mining. At the very same time, the US market is a much deeper market, a much more liquid market. And we've already received outreach from investors that could well involve over time a dual listing or somehow other be involved with the US exchange. But in the near term and for the foreseeable future, I think the ASX is the best place for Amaero to trade and to be listed.
Thank you for that, Hank. And I do note there are people putting up their hands. Unfortunately, we're unable to take voice questions, but feel free to use the Q&A function, which can be found at the bottom of your screen. I'll keep going here. So a question from Charles, great webinar. Keen to understand the relationship with CBMM or Niobic for further feedstock.
Yeah, so the company that was mentioned, there are really two primary miners in Brazil, the largest of which is a company that was mentioned. And they are, a dominant player in niobium feedstock. And by the way, niobium feedstock can be confused. So as an example, there is an ASX listed company called WA1. WA1 has been a very, very well-performing ASX stock over the last, call it 12 months, largely led on announcements that they were going to plan to mine for niobium. The niobium that they will mine for and process is not the niobium that we will utilize. To be clear, it's something called niobium ferrite. Now, niobium ferrite is used to strengthen and improve other metal or physical properties of steel and metal. Think of this as commercial construction steel, if you will. Whereas what we use is a niobium oxide. We take the oxide out of it, and then niobium in pure form is what we use to alloy with. And all the more so, that type of niobium is coming out of these mines in Brazil. So it is it's very likely there's a number of distributors that deal with those mine operations in Brazil, and that we will either directly or indirectly be involved with that company and the other mine operations in Brazil.
Thank you, Hank. This one's come through a few times as well, just in regards to shareholders being able to assist with our CapEx requirements. So, I mean, what is the anticipated capital, with the anticipated capital expense rather, can you discuss Amaero's strategy for securing the necessary funding?
Yeah, what I'll say here, and again, I try to communicate with investors the way that I would want to be communicated with as an investor. And thus the transparency on what we expect to need in capital over time. Mind you, those capital needs go out until fiscal year 27. We've tried to provide the capital that we need the rest of this fiscal year, i.e. between now and the end of June, as well as next fiscal year. So you've got a sense over the next 18 months what capital would be required. Also, if you look back over the capital raising we've done, 3 of which since I got involved in May of 22, we've tried to be, how do I phrase it? We've tried to be mindful of raising capital somewhat in a just-in-time basis. So never raising much more capital than we needed, on the assumption that as we continue to hit these milestones, the stock will re-rate, and that we should likely have the opportunity to raise additional capital in the future, hopefully at a higher, less dilutive price. And we would continue to approach our capital raise in that manner. At the very same time, we want to maintain a strong balance sheet. We want to maintain that we're proactively and prudently funding these capital requirements. But lastly, what I would add, and we commented on this in the past as well, as we get into the back half of this calendar year, early next year fiscal year, and as we have commissioned our atomizer, we begin to have offtake agreements, we begin to qualify material, and we approach 2025 with commercial sales, the expectation is that we will be able to receive funding that is equipment-backed leasing or asset-backed debt funding that will provide a significant amount of the capital as well. And so, if one was to characterize in general terms, I would think of the debt funding over time being about equal to the equity funding over time. And then in addition to both of those, the expectation is we will qualify for federal grant, non-dilutive funding over time as well, given the nature and the strategic importance of what we're doing.
Thank you, Hank. I'm just mindful of times here. So I think the last question to cut off. So looking beyond the current forecast period, how does Amaero envision its role in the evolving market for high-value specialty alloys and PBF powders? And are there any long-term strategic milestones that investors should be aware of?
I think as it relates to the first part of that question, again, in coming weeks and months, watch the commercial arrangements that we announce. Try to understand the strategic nature of those commercial relationships. And at the backdrop of that is going to be, we want to be a trusted, valued partner in this ecosystem, right? It's very unusual that you have an investment cycle as large as the investment cycle in defense platforms, as an example. It's even more unusual to have 2 investment cycles that are uncorrelated and unrelated, such as the defense investment cycle and the space economy investment cycle, right? It's even more unusual that you've got the adoption of a technology such as additive manufacturing at this tipping point, right? All of those things underscore what I expect will be a very large opportunity for Amaero. The important thing for us is twofold. We have to execute, and we've got to be a valued and trusted partner in the ecosystem. If we stay focused on those things, I'm confident that our market opportunity will continue to grow, and that we'll continue to take advantage of opportunities that today aren't even apparent to us, right? It will just simply unfold over time. So again, be mindful of the strategic logic of these relationships that we announce in coming weeks and coming months.
Wonderful. Well, Hank, that's all we have time for today. If we have missed any of your questions, please feel free to reach out by the contact details, which can be found at the bottom of our ASX releases. Thanks for the great presentation, and we look forward to hosting you again next time.
Thank you, Jane. Take care, everyone.